Hi and welcome back to TCM Education and the video number 3 of our series Green Days Library. In our previous video, which was video number 2 out of Design 30 or targeted 30 videos on this subject, hopefully in the next coming week or two, as soon as ASAP, let's call it, we talked about and analyzed Rocket Lab. The timing, if you remember, if you don't, just watch the video, was around this area here at when the stock was trading between 29.50 and 29.60, stayed here, and it was after 2 p.m. and the decision was either to close the trade, move the stop loss to 29.50 and lock 50 cents, or do the strategy, which is sell at the close at 4 p.m. or a couple of minutes ahead of 4 p.m. So that's obviously a personal preference. You can take the profits and run, or trust that you are trading the best of the US equity markets on Friday, which is the 11th ranked stock in terms of trading above 5 million shares, up more than 5%. It closed up 7.86%. The trend undeniable higher. So you trust the process, or you're satisfied with whatever the stock gave you. And if you trust the process, sometimes the process can turn back on you, and that happens. That happens. I don't know if it happens more than 50% of the time. It depends. There are so many factors that are built in here, so I don't know. But again, this is why you picked, or we picked, Rocket Lab. It's not a one stock at random. It's a stock that's out of thousands of stocks really stand out when the markets. The Nasdaq closed down 0.5%, the S&P was down 0.22, and the stock closes here, as you see, at the highs of the day. So that's the recap, basically, of a Rocket Lab, and that's all I have to say about video number 2. This is the end. Now, because we were live when we recorded video number 2, now let's go to video number 3, and basically, the stock that we're going to analyze is the most trivial one for this coming Friday, for last Friday, which is this stock, Kroger. Why Kroger is a trivial candidate? First of all, there were very few stocks that reported earnings on Friday. Very few. One of them was Kroger, and the stock ended up with a huge gap up after the earnings. And sorry, the earnings came in the before the market opened. So you can see here the gap, and then it started trading. I already signaled the first potential entry in the chart, that we'll analyze it together right now. So assuming we're not going to enter here, we're not going to enter here, we don't want to enter a breakout trade, which is here at 70.30 or something like that. We want to enter close to the view up as possible. Okay, why is that? And close to a round number as possible, preferably buy at a round number. So that's what we're doing here. We're trying to use the view up as support. Keep in mind, the volatility in the first half an hour is the biggest volatility all day. Now the volumes are kind of stable in Kroger. I don't know why. I'm just paying attention to it right now. You can see the volume bars here at the lows of the day. Very mellow price action. Very mellow. Hold on a second. So the concept here, again, to try and enter the trade as early as possible. Now, can we trust the trend in Kroger? We cannot trust anything when we're talking about stocks. Okay, we just analyze the chart. We see a huge gap up. we see the stock basing above 69. Not very easy to observe, but it's definitely above the VWAP. Okay, so now the question is, do you want to trade Kroger? Because there are so many other alternatives. If you're focusing on another stock, obviously you're not going to trade Kroger. Why I'm pointing to Kroger is because as day traders, we want to focus on stocks that have not only the technicalities, but the fundamentals. So the intraday fundamentals are earnings. Okay, we are not analyzing the earnings. Institutional investors and traders, all of those guys are decided that the earnings in Kroger are amazing. We can read about it later on Yahoo Finance, but I don't need to read anything when the stock is up 6 or 7% at the open. When the market is not like supporting anything like that, it's a breakout on the daily chart. So it has the whole package, and now as a trader you have to take the risk and press the button. And the idea here is that you press the button according, if you want to use our system, you use a $10,000 position, a $5,000 position, a $100,000 position. That's up to you. Risking no more than 1%. So if you risk buy a $100,000 position, you risk 1,000. You buy a $10,000 position, you risk 100. There will be some slippage and commissions, and yeah, that's pretty much all you can have deal with this stock. So take into account it's 1% max loss plus commissions plus some slippage. I mean, and the volume in Kroger is very, very good. It's almost I mean the slippage can be of 3 cents, 5 cents. That's it. Unless something dramatic happens, obviously it didn't happen. So let's assume an entry above 69, and we use 69 as a stop loss. Okay, so where is the entry? You can enter at 69.50. It still fits the strategy. You can enter at 69.30. It fits the strategy. You can enter at 69.10. It fits the strategy. It's not very easy to enter at 69.10. What is clear and what I suggest that wherever you enter, and let's for the purpose of this example, we're gonna use 69.50, but there are better entries. Use a stop loss under 69. Why? Because first of all, you're dealing with a stock that's $69. Then it's earnings day. Anything can happen. I mean, as much as it went higher, could have gone down 1%, maybe 2% on a $69 stock. That's more than $1.50 pretty much. So you don't want to start the trading day with a big loss that can rattle your whole trading day. The process is so you rather take a small loss 5 times in a row rather than a big loss one time per day. You take a big loss, recovering from it mentally is going to be very, very tough. You're going to chase the trade or the money all day. Most likely you won't be able to do it. Okay, but that's my take. Now remember, this is a stock that reported earnings. It has nothing to do with the market. It's Kroger. It's a supermarket, like not a Walmart, but maybe a small Walmart. I never shopped at Kroger when I lived in the United States, so I don't know what they're carrying. Anyway, they're doing a great job. Okay, so this is Kroger on earnings, and we enter the trade at 69.50. We take the 1% loss at 69. For the purpose of this demonstration, we have a $20,000 position. That means 250 or something like that of 250 shares. And now we manage. Okay, so how can you manage this stock? And what you do here is basically, being that it is your money, you do whatever you want. What we suggest, okay, is to let it run. And when you let a stock run, great things can happen. What is the worst case scenario? It's coming back to the entry or back to the stop loss, and you lose the 1%. In this case, obviously, none of these scenarios happen. The stock trades higher from 69.50 up to the highs of the day posted here by Momo, 72.29. And then it pulls back. Now, if you are very, very patient with the stock, you can elevate your stop loss later in the day, doing nothing, okay, to this level, 71.12, and then you can close it at 4 p.m. at 71.80 to 90, whatever, and this is a huge winner, okay? So that's one option. I mean, the scenarios here are endless. You can take partials. Maybe you can add. We're not going to deal into that, because if we're going to deal into all the scenarios that are possible, the video here, which is already running on 11 minutes, is going to go to 1 hour per video, and who's going to listen to those or watch 1 hour of video per share? Okay, it's impossible. You have also a life here, and we have a life as well. So we're going to deal with one scenario. Obviously, it's not optimal. There are plenty of other scenarios to deal with. This scenario takes into account that you're buying the strongest stocks. I am repeating it. That's why we're using this scenario. You're buying the strongest stocks in the US equity markets on a given day among the first 10 or first 20. Nothing beyond that. So we're looking at the top of the top of the top, the top 0.001%, something like that. No, I'm exaggerating. 0.01% maybe. Anyway, so you want to trust the stock to close at the highs of the day. Now, if it doesn't close at the highs of the day, look for a position where you can elevate your stop loss. And up front, you already elevated the stop loss to the entry after the stock is 1% in the money. So basically, the stock cannot lose money. Okay, so now the question is how much is it going to win? 1%, 2%, 3%. In this case, the stock is up $1.50. $1.50 in this case is 3%. So it's 3 to 1. At 12 point, it was even more. But let's say at the close, it's 3 to 1. That's again, nothing spectacular, but 3 to 1 is nice. In this case, almost without any risk, because once the stock got in the money, it didn't pull back. So the price action was very, very, let's call it supportive of this trade. And closing at the highs of the day also supportive. Like I said, this is not trivial that the stock closes near the highs of the day. Many, many times you're gonna, using this strategy, you're gonna give up on profits. Okay, that's depends on so many factors. But if you trust the process, that can lead to spectacular moves late in the day. And we've seen those type of scenarios as well. So, sorry. If you like the concept, please replicate it with other stocks. This is video number 3 out of 30. Thanks for being here with us. Please share this video with your fellow day traders and support our channel by subscribing. Thank you, and we'll see you in our next video.